SCHD or VYM. Two of the most respected dividend ETFs in the market. Both offer income. Both offer long-term potential. But in 2025, which one belongs in your portfolio? Welcome to Asset Index, where we help you navigate wealth with data, not hype. Today, we are diving deep into SCHD versus VYM. We are comparing performance, yield, dividend growth, holdings, fees, tax efficiency, and who should own which. Let's break it all down. Part 1. What are these ETFs? SCHD is the Schwab U.S. Dividend Equity ETF. It focuses on quality companies with strong dividend growth, profitability, and financial strength. VYM is the Vanguard High Dividend Yield ETF. It targets companies with high current dividend yield, regardless of growth or other fundamentals. SCHD is about quality and growth. VYM is about yield and broad coverage. Part 2. Dividend yield. As of 2025, SCHD is yielding around 3.5 to 4%. VYM is yielding closer to 3%, slightly lower. Historically, SCHD has delivered more consistent and rising dividends, while VYM has focused on a larger group of high-paying stocks. Part 3. Dividend growth. This is where SCHD stands out. Since launch, SCHD has grown its dividend almost every year. From 2020 to 2024, SCHD's dividend payout increased by over 30%. VYM's dividends are steady but less aggressive in growth. It focuses on yield today, not necessarily growing payouts over time. Part 4. Holdings. SCHD holds about 100 companies. It is selective. Some names include Broadcom, Texas Instruments, Coca-Cola, Verizon, and Pfizer. SCHD screens for return on equity, dividend consistency, and low debt. VYM holds over 400 companies. It is broad. Top holdings include Johnson & Johnson, JP Morgan, Exxon, Home Depot, and Procter & Gamble. SCHD is more concentrated and growth-oriented. VYM is more diversified and yield-focused. Part 5. Performance. Over the last 10 years, SCHD has returned between 10 and 11% annually. VYM has returned between 8 and 9%. SCHD tends to outperform during strong bull markets. VYM can perform better during sideways or flat markets due to its broad exposure. Part 6. Risk and volatility. SCHD has slightly more volatility due to its focused portfolio and tech exposure. VYM is more diversified, which smooths out short-term swings, but neither ETF is considered high risk. They are both stable, dividend-focused funds. If you are highly risk-averse, VYM offers more cushion. If you want stronger upside, SCHD may be better long-term. Part 7. Payout schedule. Both ETFs pay quarterly dividends, making them ideal for reinvestment or quarterly income strategies. There is no major advantage here. They are equal in payout frequency. Part 8. Tax considerations. SCHD and VYM are both tax efficient. Their dividends are generally qualified, meaning lower tax rates for most U.S. investors. SCHD may trigger fewer capital gains due to its structure and lower turnover. VYM's broader exposure may generate slightly more taxable events over time. Part 9. Sector exposure. SCHD is overweight tech, healthcare, and consumer staples. VYM leans heavier into financials, energy, and industrials. SCHD's tech weighting gives it more upside in strong growth years. VYM's energy and financial exposure can help in rising rate or inflationary environments. Part 10. Expenses and cost. SCHD has an expense ratio of 0.06%. VYM has an expense ratio of 0.06%. It was a tie. Both are ultra low cost and perfect for long-term holding. Part 11. Use case. Who should own what? Choose SCHD if you want dividend growth, strong long-term capital appreciation, higher quality holdings, more focused exposure. Choose VYM if you want higher current yield, broader diversification, lower volatility, exposure to value and mature sectors. Part 12. Can you own both? Yes, and many investors might do something like 70% SCHD and 30% VYM if you are focused on growth and future income, or flip that to prioritize stability and yield in retirement together. They form a powerful dividend-based Part 13. What I am doing in 2025 right now, I am increasing my allocation to SCHD because I value dividend growth and long-term quality over just yield, but I still hold VYM for balance and exposure to dividend names outside of SCHD's screen. I let SCHD compound, I let VYM add stability, both play a role. But SCHD is my core. Final thoughts: SCHD and VYM are two of the best dividend ETFs available. They're low cost, simple to understand, and built for real investors, not speculators. Whether you are building wealth or living off it, these ETFs deserve a spot in your portfolio. Subscribe to Asset Index for more weekly ETF breakdowns and long-term investing strategies that actually work.